Welcome to Wisays. Sensex, Nifty 50, Nifty Next 50, Nifty Mid Cap 150, Nifty Small Cap 250. These are benchmark indices that set the standards for all the fund managers of India. Mostly it has been evident that in the long run, these benchmark indices have always given stable and even better results than actively managed funds. Active fund managers high fee charge करते हैं to give us a particular return. They charge anywhere between 0.5% to 2% fee on their portfolios or indices. वहीं इंडेक्स फंड का कमीशन या एक्सपेंस रेशियो इनसे हमेशा लो होता है विद इन अप्रॉक्स एवरेज ऑफ 0.5% एंड इवन देयर एग्जिट लोड इज वेरी लेस. निफ्टी वह बेंचमार्क इंडेक्स है जो मार्केट को मॉनिटर करती है. द फंड्स दैट इन्वेस्ट इन इट आर कॉल्ड इंडेक्स म्यूचुअल फंड्स. दिस टाइप ऑफ इन्वेस्टिंग इज पैसिव इन्वेस्टिंग बिकॉज यू और योर फंड मैनेजर इज नॉट एक्टिवली मॉनिटरिंग इट एंड मेकिंग मेनी चेंजेस. इंडेक्स फंड में इन्वेस्ट करते समय 3 मेन फैक्टर्स का ध्यान रखना चाहिए. पहला है एक्सपेंस रेशियो या फिर फंड फी. अगर एक्सपेंस रेशियो या फंड को मैनेज करने की फ़ी लो है then it would be beneficial for the investor. 0% to 0.2% would be the best. Secondly, exit load यानी अगर आपको मैच्योर होने से पहले इंडेक्स फंड से मनी विड्रॉ करनी पड़े तो उसमें लगने वाले चार्जेस यह जितने कम हो उतने बेहतर है. थर्डली, ट्रैकिंग एरर. क्योंकि इंडेक्स फंड डायरेक्टली बेंचमार्क इंडिसेस को रेप्लिकेट करते हैं तो इनमें एरर होने की भी चांसेस है. यह ट्रैकिंग एरर लीस्ट होने चाहिए. इससे पता चलता है कि फंड एफिशिएंटली डुप्लीकेट किया जा रहा है या नहीं. कुछ फंड्स 95% तक इंडेक्स फंड को कॉपी करते हैं तो कुछ 100%. इट ऑल डिपेंड्स ऑन द स्ट्रक्चरिंग. ट्रैकिंग मतलब अगर किन्हीं स्टॉक्स को बेंचमार्क इंडेक्स से हटाया गया या कुछ नए स्टॉक्स ऐड किए गए, स्टॉक्स का इन्वेस्टिंग परसेंटेज रिड्यूस या इंक्रीज किया गया एट्सेट्रा. अगर ये मॉनिटर करने में कोई इंडेक्स फंड देरी कर देते हैं तो उसे ट्रैकिंग एरर कहते हैं. इससे इंडेक्स फंड रेप्लिका के रिटर्न्स पर असर पड़ता है. The three major stock indices in India are Nifty 50, Sensex and Nifty Bank, representing the overall market, blue chip companies and the banking sector respectively. आज के इस वीडियो में इंडिया की टॉप 5 निफ्टी इंडिसेस के बारे में बात की जाएगी. They will be large cap based and I will explain why and how they have been picked. One of the main reasons that it is mostly bought by the investors is its exit load, which is 0%. Then they charge very low fee to manage their fund, so their expense ratio is 0.06%, which is very low. So if we see the UTI Nifty 50 index fund has a expense ratio of 0.818%, whereas ICICI Prudential has an expense ratio of 0.17%. Navi has an expense ratio of 0.06%. The top 5 holdings are similar for all of these funds. The sector allocation, everything is replicating the Nifty 50 index. So I've replaced the UTI fund and I've placed instead HDFC index fund here. Even here the returns are very similar. The exit load, which is 0.25% for HDFC. HDFC is managing 14,220 crores of assets, whereas SBI is managing 7,000 crores, Navi is managing more than 1,900 crores, and ICICI is managing more than 8,000 crores of assets. So after comparing a lot of indices, we have a bunch of indices here. Four of which are UTI, ICICI, Navi, Nifty 50, HDFC, and the other one, the fifth one is SBI. And this is the expense ratio and this is the exit load that all of these indices have, and this is the asset under management. This is the minimum investment that you can make. In Navi Nifty 50, you can start with as low as ₹10 for SIP as well as for lump sum. The exit load that is least is for Navi, UTI and ICICI. So anyone would prefer something which doesn't have any exit load. So these would be the 3 indices that do not have any exit load. And if we then SBI and HDFC has more than 13,000 crores of assets, UTI has more than 16,000 crores, and Navi has more than 1,800 crores of assets under management. Navi Nifty 50 index fund has the least tracking error out of these 5 indices. Then the expense ratio, that is the fee that they charge. Now Navi Nifty 50 has 0.06% fee that they are going to charge. So they are pretty similar. Then 3-year returns is something like this, 15%, and over the past 5 years also they have given kind of similar return of 15%. So anything is good. And if we see the SIP returns also, and for all of these 4 funds, then past 3-year is 27%, and past 5-year returns for the SIP thing is 57% for all of these funds. So in 2021, Navi Nifty 50 index fund was created, but these 4 funds were created in the year 2013, and since then the Nifty 50 index, the benchmark index, has given 12.70% of return, whereas these 4 indices have kind of gone ahead of this benchmark index and has given more than 13% of returns. So out of these, the SBI has given 13.4% return, UTI has given 13.7% return, ICICI Prudential has given 13.80% of return, and HDFC has given 13.80% of return. Then if we even consider more tracking error, then the above 5, it got into existence in 2013. Then maximum it has given kind of similar returns, 13.6%. But if you don't want to give more fee, the returns are also similar to others, like 15.7%, which is good. 3 years, 15.1%, good. This is a little bit concerning factor here, the exit load and the tracking error, because we have indices with lesser tracking error than this one. So these are the 5 picks that we have. If you want to consider investing in the large cap based index funds, then these are the indices that you can consider, keeping in mind the tracking error, which is the least for Navi, and the expense ratio as well, the expense ratio and the exit load as well, which is the least for Navi. These came into existence in the year 2013, and this is a slightly newer fund, but it is performing quite well. So thank you.